Greetings, deep divers. Get ready for a truly fascinating journey into the world of central bank digital currencies.
It's a hot topic right now.
Absolutely. Today, we're diving into a captivating story from Brazil, a country that's, well, consistently been at the forefront of financial innovation.
They really have, especially with things like PIX.
Exactly. So our mission today is clear. We've taken a stack of compelling sources, articles, research papers, central bank statements, and we're going to extract the most important nuggets of knowledge about Brazil's ambitious digital currency project known as DREX.
DREX, yeah.
See, DREX started with this groundbreaking blockchain-based vision, but it's recently taken a rather surprising course correction.
A pivot, you could say.
A definite pivot. We'll trace that evolution. What happened? Why the pivot, and what it all means for the future of digital money, not just in Brazil, but, globally.
Right.
Our goal is to simplify these complex ideas, highlight the big questions still lingering, and connect everything with clear, memorable insights for you.
Precisely. And this deep dive into DREX is particularly timely because it really showcases the real-world complexities and, frankly, the trade-offs central banks face when trying to innovate with cutting-edge technology.
It's not just theoretical anymore.
Not at all. It's not just about what technology can do, but what it should do, and crucially, how it needs to navigate existing legal and social frameworks.
Makes sense.
To really grasp DREX, maybe think of it like this. Upgrading your traditional money to a modern USB-C cable.
Okay, interesting analogy.
Yeah, it's still the same underlying electricity, the same Brazilian rays, but now with a new, much more versatile connector.
Yeah.
This new connector can plug into many more devices, enabling smart workflows, automated finance. It ultimately opens up entirely new possibilities for how money moves and is used.
So more potential connections, more programmability.
Exactly. Or consider a major airport hub.
Okay.
Brazil's existing instant payment system, PIX, already moves passengers. That's your everyday retail payments incredibly fast and efficiently. Everyone loves PIX.
Yeah, it's huge there.
It really is. DREX, though, in its original ambitious vision, was focused more on the planes and the cargo.
Ah, the back-end stuff.
Right, the complex high-value settlement between big financial players. The idea was to make that entire financial network, the very backbone of the economy, run even smoother and smarter.
Okay, let's unpack this a bit more. What exactly is DREX, or what was it initially supposed to be?
Well, it started life as Brazil's central bank digital currency, a CBDC. The aim was a digital form of the real.
And the big goals?
Primarily boosting efficiency, security, and especially programmability in financial transactions. That was key.
Programmability. And how were they planning to achieve that?
Initially, the vision was for a multi-asset programmable platform built on distributed ledger technology, or DLT.
So blockchain, essentially.
Basically, yes, a type of blockchain. It was meant to be an entire ecosystem of services built around programmable digital money and tokenized assets. Quite ambitious.
It sounds it. But then you mentioned a pivot. What happened in August 2025?
Yeah, that was a really significant announcement. The Central Bank of Brazil said it's abandoning the blockchain component for DREX's initial launch.
Abandoning it completely.
Well, not abandoning the goals, that's the fascinating part. It seems more like a pragmatic and strategic shift.
Okay, so what's the focus now?
The project is narrowing its immediate focus. It's looking at streamlining things like collateral management and reconciling liens for credit guarantees.
So solving specific financial friction points.
Exactly. It's about solving a very specific high-friction problem within the existing financial system first. The aim now is to ship a product, maybe a simpler one, to the public by mid-2026.
Which is later than originally planned, right?
Yes, that's a revised timeline. Earlier expectations were maybe early 2025 or even late 2024.
And important to note, it's not replacing PIX or cash.
Absolutely crucial. DREX is designed to complement existing systems. PIX handles those everyday, quick retail payments brilliantly. DREX, even in this revised form, was always intended for more complex, big-ticket operations and, sophisticated financial transactions that happen mostly behind the scenes.
Got it. So where did this ambitious journey, the one with the blockchain and the whole ecosystem, actually start?
It goes back to 2021. DREX, which was originally called the Digital Real, has been under development since then. It was directly inspired by academic research into blockchain and smart contracts.
Then the initial structure.
It was planned as a two-tiered system. First, a wholesale layer for transactions between regulated financial institutions.
Okay, bank-to-bank stuff.
Right. And then a retail layer for tokenized bank deposits issued to end customers.
Tokenized deposits, so digital representations of money in my bank account.
Kind of, yeah. And this whole thing was specifically going to be built on Hyperledger BSU.
What's that?
It's a specific type of open source blockchain platform. It's compatible with the Ethereum virtual machine, which basically means it can run smart contracts similar to how Ethereum does.
Right, so opening the door for DeFi-like things, but regulated.
That was the idea, yeah. Regulated decentralized finance elements.
Okay, so they launched a pilot phase.
They did. The first phase kicked off in March 2023. It involved a pretty big group, 14 to 16 major financial institutions and tech companies.
And what were they testing?
Their initial focus was on use cases like tokenizing government debt, seeing how that would work on the platform.
And this is where the problem started to surface.
Yes, exactly. This is where it gets really interesting for anyone following the CBDC space globally. The project soon ran smack into what became known as the DREX trilemma.
The trilemma. Okay, what's that? Sounds challenging.
It was. It's the immense challenge of simultaneously achieving three critical things: robust privacy, massive scalability, and advanced programmability, all within that blockchain environment.
Privacy, scalability, programmability. Why was that so hard?
Well, the core difficulty was ensuring enough privacy to comply with Brazil's very strict data protection laws, the LGPD,
Right.
while also giving the central bank supervisory node full visibility for oversight. You see the tension.
Absolutely.
Yeah.
How do you have privacy and full oversight?
Exactly. And doing all of this without breaking the system's ability for different smart contracts and assets to work together seamlessly, that's composability, or its ability to handle potentially millions of transactions. It's a tough balancing act.
So they tried specific technologies to fix the privacy part, didn't they? You mentioned things like zero-knowledge proof.
They did. They tested specific privacy solutions, things like Rails, Anonymous Tether, and EY's Starlight. Many use that advanced zero-knowledge proof tech.
Can you remind us what that does, simply?
Sure. Zero-knowledge proofs are a cryptographic method. They let you prove something is true without revealing the underlying data itself.
Like proving I have enough money without showing my balance.
Exactly like that. Incredibly powerful for privacy. But in the DREX pilot, while these solutions showed promise, they turned out to be too costly and, frankly, too slow to implement at a national scale.
Ah, the practicalities.
Right. They led to longer response times, which means a worse user experience, and they actually impaired the programmability they were trying to achieve.
So the solutions created new problems.
Pretty much. Even testing things like segregated networks, which are kind of like layer 2 solutions you hear about in public blockchains, basically building another layer on top to speed things up that just introduced too much complexity and new security risks.
So the trilemma wasn't just a theoretical problem.
Not at all. To simplify it further, maybe use that car analogy again. Imagine trying to build a car that's perfectly secure, completely transparent for regulators, and incredibly fast and easy to modify.
Okay.
You can make it super fast, but then making it perfectly secure and transparent is really hard. Or you make it perfectly secure, but then it might be slow or not adaptable. Getting all three working together perfectly for potentially millions of users, that was the monumental task with DREX on blockchain. The pilot report itself clearly stated a major adaptation was needed.
So the tech was a huge factor. But you hinted earlier there were other things pushing for this pivot too.
Yes, definitely. Beyond the pure technical hurdles, these external factors certainly played a role. There was a change in the central bank's presidency.
Which often means a strategy review.
Often, yes, a fresh perspective. Then there was a massive, unrelated $200 million hack on some reserve accounts in Brazil.
Wow. That must have raised security alarms everywhere.
You can imagine. It undeniably heightened concerns around security and the real-world risks of complex, new digital infrastructure.
And international factors.
Well, the U.S. Federal Reserve's decision not to create its own digital dollar network, but instead to sort of encourage private sector innovation, that sent a signal globally.
Suggesting maybe central banks don't need to build the whole thing themselves.
Perhaps. Or at least that a more measured problem-first approach might be wiser. So all these things, the tech challenges, the leadership change, the hack, the Fed's stance, they collectively underscored the need for pragmatism over, let's say, pure technological ambition.
Which brings us to today. So with all that context, how has the messaging changed and what does DREX look like now?
The messaging has definitely shifted, quite clearly. The new central bank president, Gabriel Gallipolio, explicitly emphasized that DREX is now a technology-agnostic financial infrastructure project.
Technology agnostic. That's a big change from blockchain first.
Huge. It means they're not wedded to one specific tech anymore. The
Yeah.
core focus now is on solving that identified problem, facilitating the flow of credit and significantly reducing friction in asset collateralization, making lending easier and safer.
So back to basics in a way. Fixing a known issue.
In a sense, yes, a very complex issue, but a known one. So the initial launch, now targeted for mid-2026, will likely be a simplified version, probably without blockchain, probably without full tokenization for the general public right at the start.
Building the foundations first.
Exactly. It's about building the underlying infrastructure for credit and the financial system's back end first. The pilot, though, it's still going, now in its second and third phases.
Still testing things.
Yes, continuing to test crucial use cases like collateralized credit, tokenizing government securities, and something called delivery versus payment, or DVP settlement.
DVP, what's that?
It means the transfer of an asset, like a security, and the payment for it happens simultaneously, instantly linked.
Ah. So no risk of paying and not getting the asset, or vice versa.
Precisely. It eliminates that counterparty risk, making transactions much safer. And another key point, DREX will not be an interest-bearing instrument.
Meaning you won't earn interest holding it like a savings account.
Correct. Which reinforces the central bank's intention to avoid using it as a direct monetary policy tool. The focus is purely on its utility for secure, efficient transactions.
Okay. And let's loop back to PIX again. How does this newer, maybe more focused DREX relate to the PIX system that Brazilians already use constantly?
Good question. While PIX absolutely excels at those everyday instant retail payments.
Buying groceries, paying friends.
Exactly. DREX aims for the higher value, programmable, and more complex transactions that are really more relevant to businesses and the broader financial system.
Can you give us that concrete example again? Like the car purchase.
Certainly. Imagine buying a car, a significant transaction. With DREX, in a future where it's fully realized, the payment for the car and the transfer of the vehicle's digital title could happen at the exact same moment, linked via a smart contract.
Wow. So no waiting for paperwork, no need for intermediaries like notaries in the same way?
Potentially, yes. It could eliminate a lot of that friction and risk for both the buyer and the seller. The car title only transfers when the money is confirmed, and vice versa.
That's a level of efficiency and security PIX isn't really built for.
Right. PIX is fantastic for speed and retail, but DREX targets that programmability and settlement finality for bigger, more complex deals.
Okay. And looking bigger picture, what about privacy? That was a key part of the trilemma.
It was, and the central bank remains very publicly committed to ensuring privacy and data protection. They've stated clearly that DREX will only move forward with the solutions that guarantee full compliance with Brazil's banking secrecy law and the LGPD.
So that commitment remains even without blockchain.
That's the stated commitment, yes.
Yeah.
How they achieve it technically in the new model is one of the big open questions. But globally, Brazil's proactive stance, even with this pivot, has really pushed its financial sector to explore tokenization and DLT. They've set a precedent.
So it's still influential.
Definitely. And we see other big international initiatives like the Bank for International Settlements project Agora that involves 7 central banks exploring cross-border payments with tokenized money.
Showing this isn't just a Brazilian experiment.
Not at all. It shows this whole area, tokenization, smarter settlement, is a global trend. As of, say, late 2024, only 3 CBDCs are fully launched worldwide, but something like 44 are in pilot phases.
So Brazil is right in the middle of all this global experimentation and learning.
Absolutely. Learning by doing, adapting as they go.
So let's bring it home. What does this all mean for you, our listener, maybe for everyday Brazilians eventually, and for the broader financial landscape? What are the future implications?
Well, initially, as we said, the direct impact on everyday users will probably be limited. The immediate benefits are likely to be behind the scenes.
Like cheaper loans or faster mortgage approvals eventually?
Potentially, yes. Cheaper, faster credit, safer asset settlement within the financial system. It's that invisible infrastructure making existing financial services run a bit smoother, maybe cheaper.
But you mentioned concerns earlier.
Yes, and this raises a really important point, one that goes way beyond Brazil. The policy debate around privacy and government control associated with CBDCs.
It's a big one.
It is. Critics, some industry folks, commentators like Raul Senna from Investidor Sardinia in Brazil, they express real concerns about the potential for total traceability of spending.
And the programmable money aspect.
Exactly. Fears about financial authoritarianism, worries that programmable money could be used for things like putting expiration dates on funds.
So your money disappears if you don't spend it.
Potentially, yes. Or restricting where certain funds can be spent, like social benefits only being usable for food, or maybe limits on buying alcohol.
Even if the central bank says they won't do that.
Right. Even if the central bank states, as Brazil's does, that it will respect privacy laws, the technical capability to program money in these ways exists or could exist, and that capability alone fuels a lot of public debate.
How does that compare to other projects, like the digital euro?
It's an interesting contrast. The Digital Euro project, for instance, is exploring ways to offer higher levels of privacy, especially for low-value transactions, trying to mimic some features of cash. So there are different approaches being debated.
And the legal side in Brazil.
Well, Brazil's legal framework for DREX already includes laws that authorize the central bank to create and regulate it. It even allows for smart contracts to potentially replace some functions of traditional notary services.
Which enables efficiency but also raises those control questions.
Precisely. It means constant vigilance is needed from citizens, from lawmakers, to ensure these powerful technical capabilities don't end up infringing on civil liberties as the system evolves.
That's a crucial point, and definitely a debate that's only going to get louder globally as these technologies develop. So ultimately, how do you see DREX fitting into Brazil's financial ecosystem, which already has the super popular PIX, credit cards, even private stablecoins are emerging? Does it find its own unique space?
I think its success will absolutely hinge on demonstrating tangible, undeniable benefits, specifically in those areas of programmable payments, collateral management, and asset settlement.
Things the current systems don't do as well.
Exactly. It needs to offer benefits that current systems simply don't provide. It has to feel tangibly better, safer, or more efficient for the financial institutions and businesses using it first.
So not just innovation for innovation's sake.
No. If it can genuinely reduce costs and risks in those complex, high-value transactions we talked about, then yes, it absolutely carves out its essential role in the ecosystem. The proof, as they say, will be in the pudding or in the pragmatic utility in this case.
That's a great way to frame it.
Yeah.
The focus is now on pragmatic utility. Now, for you, our curious listener, thinking about all this, here are some knowledge gaps, some questions we think are worth exploring next to continue your own deep dive.
Yeah. 3 key things come to mind. First, architecture. What exact non-blockchain platform, if any specific platform is chosen, will be used for DREX's initial 2026 launch? And maybe more importantly, how will it handle the promised programmability without using DLT? That technical how is still a bit fuzzy.
Okay, good one. What else?
Second, privacy model. Given those ongoing privacy challenges, how exactly will the Central Bank of Brazil fully guarantee the privacy and data protection of transactions at scale? Especially if the system potentially expands later to more complex programmable uses. What are the technical and legal safeguards?
Right, the details matter there. And a third.
Third, retail user experience. Looking further out, beyond streamlining business credit, what truly compelling retail use cases could DREX eventually offer? Things that PIX or existing digital payments don't already cover well enough to really encourage widespread public adoption down the line. Is there a killer app for the average person?
Excellent questions to ponder. And there you have it, our deep dive into Brazil's DREX project. It's quite a story, isn't it? A real testament to the complex, ever-evolving world of digital finance.
Definitely. Full of ambition, significant technological hurdles, and these really crucial policy debates.
And this isn't just a story about technology, is it? It's really about how money itself might change, fundamentally, and what that means for our financial lives, maybe even our fundamental freedoms.
That's the big picture, yes.
So as Brazil, and indeed the whole world, continues to explore this fascinating but, let's face it, complex landscape, we're kind of left to ponder, aren't we? When our money becomes fully programmable, what incredible new efficiencies might we gain? But also, what challenging new questions about control, about privacy, and about freedom will we absolutely need to answer?